So what we're seeing in the market today is that demand growth is slowing. I think that now 3/4 of the year gone, we're seeing oil demand around 700,000 barrels a day. And on the other hand, we're seeing record oil supply, not just from the unwinding of OPEC cuts that have added about 1.5 million barrels a day since the first quarter through September, but we're also seeing record production in the United States, in Brazil, in Guyana, and Canada. So it's this mismatch between the very strong supply numbers and weaker demand. But what this supply glut so far has largely been absorbed by the market. Crude demand is also at record high in the third quarter due to refinery throughputs, but also direct crude burn. And the surplus in the market has largely been absorbed in inventories where they're having a less of an impact on the market, in particular in China for crude oil, but also in gas liquids in the United States. So we're not seeing the surplus piling up in tanks in key markets as of yet, but this is something that we think will shift towards the end of the year.
So Toril, so why aren't prices already weakening given this oversupply?
So prices have been trending lower. We're now near a 3-year low. But there's obviously different factors pushing and pulling the market, as we're saying. On the one hand, we have the surplus emerging in the markets that has so far been absorbed by Chinese stockpiling and inventories elsewhere. But we're also seeing the risk to supply from increased sanctions on Russia and Iran. We're seeing increased tensions in the Middle East at the moment between Israel, Iran, and now with an attack on Qatar. We're also seeing new sanctions on Russia and attacks on infrastructure there. So this is sort of supporting the market at the current moment.
Is OPEC Plus making a mistake, a big mistake, actually, by increasing production further?
As we've seen, the market has been able to absorb the increase in production from the OPEC Plus countries so far. And inventories are tight in OECD countries. Crude oil stocks are below the 5-year average. So obviously there is a room for the market to absorb this additional barrels. Then moving forward, it would all depend on the strength of oil demand growth and also at the continued stockpiling by some of the consuming countries.
So when you look at actually what happens next, how much of this, oil surplus, and you were trying to explain some of the dynamics, but how much of the oil surplus will likely be scooped up by China, for example, for strategic reserves going forward?
As we say now, that the oil surplus that we're seeing in our balances of 3 million barrels a day, as we say, it's untenable. There isn't the capacity or the ability for the market to absorb such an increase. China has capacity to continue building oil stocks. We saw from February to August this year about 100 million barrels of crude oil being absorbed by China. So if they continued to purchase oil at the current rate, that will help absorb some of the surplus, but it will be nowhere near the 3 million barrels a day that we are projecting. So there will have to be some adjustments on the supply or demand side to make the market rebalance.
Toril, do you think China ultimately could put actually a floor under prices?
So we are seeing that both China but other consuming countries are quite sensitive to the prices. So when the prices fall, they are increasing demand, not for end-use consumptions, but for storage. So that is, to a sense, a floor. But with the extent of the increase today, we could also see adjustments on the supply side. Prices fall to a lower level. We're seeing U.S. producers in particular adjusting their strategies and growth forecast in response to this well-supplied market and to the lower prices. So you can also see adjustments on this side.
Toril, going forward, do you think this is also the beginning of the end for OPEC's mission of supply management?
We don't think so. Of course, we're seeing now very proactive market management by the OPEC Plus Alliance, and they're meeting on a monthly basis to assess the market situation. Now there's a reset. We have completed the unwinding of the first tranche of production cuts of 2.2 million barrels a day. Now this is the start of the second tranche of 1.65 million barrels a day. But OPEC has only committed to the first increase of 137,000 barrels a day increase in the target from October. The actual increase would be less than what we're seeing, as some countries are already overproducing vis-a-vis their targets by about 1 million barrels a day, and we're seeing other countries are now reaching capacity constraints. So we don't think it's the end of the market management, but it's a different strategy than we've seen over the past few years when non-OPEC Plus countries have been taking all the growth in supply. Now, in moving forward, we're seeing the growth in production being split between OPEC countries and non-OPEC countries.